Good morning, all. Greg here, Master Trader. We're starting off today with a bearish gap. I marked it off right here. You can see on the 30-minute chart. It's trading right in that area there. I put 248.51, just 248.55, up a little bit from a couple of pennies from that area. But the short-term bearish pattern here with a weekly uptrend, and so I'm interested in now to see, obviously, where this ends at the end of the day, because we've got a breakout on the weekly time frame, new highs, and assuming it closes down here, right? There's a bearish gap, gapping below the lower three bars that were consolidating after a gap up, which said, hey, buyers are continuing to step up here. And because the trend was up, bottoming pattern here, new high, next breakout, consolidation sideways, creating support, the assumption is we're going to go higher. Well, this is a pretty large gap down. Look at the 30-minute chart, rounding top, and a gap down here. So it certainly could find some legs and come back up into the gap fill where there should be sellers, because this now all of this support becomes resistance. We see if it rolls back down. But the most bearish thing it could do is it just goes sideways here and then drops again. So if it was to close down here or lower, we would have a green bar ignored and a breakout failure beginning on the weekly time frame, which of course would be a bearish pattern short term. So we'll have to see where that goes. Now, today is Friday, as you know, and it's also triple witching of options, which could just kind of hold things in place. Typically it's expected to have a lot of volatility, but we may just have a lot of tugs back and forth, where things just don't really go too far. Now, if they don't go too far based on this gap down, while still, at the end of the week, it looks pretty bearish, actually this breakout becomes a topping tail of sorts, and then we'd see where it goes tomorrow, should say on Monday. So starting off with a negative gap down, we'll see how far it goes, considering the fact that it is triple witching. The Qs here showed relative weakness yesterday. They didn't drop a lot, but they couldn't hold up and close above the open of the day. That's why we got a red candle. They're weak here this morning. The intraday 30-minute chart has rolled over. Trends are still up, so we give the benefit of the doubt, but we don't want to see prices retrace too far. Now, when we talk retracements, this is, we don't do the Fibonacci thing. That's, in my opinion, the holy grail type of hocus pocus analysis. Just common sense about retracements. It went up, started here, went up here, and the further it goes down here, the more negative it is. Saying whether it stops here, here, or here. Just look to the left on the intraday chart, see if there's some support. There's some here, and there's nothing here. So, this retraced, the concept of greater than 100% retracement, right? Greater than 100% retracement, we typically look for stabilization after it breaks through the support. And that's what's happened here, but the trend is still down, right? Lower highs, lower lows, and now we'll see where it goes from here, okay? Let's take a look at the transports. Again, they're holding up, but weakening a bit, but great recovery, getting through this resistance here. So we got weakness, we've got some strength, longer term strength by recovering from there. Russell up against some resistance here. Just been whippy, really whippy, erratic sector this year, whipping up and down, where biotech's, doing well at times and then starting to, they weaken again. And let's just take a look at them quickly. It's fine. We could use IBB. strength, nice pullback up, falling all the way back down, all the way back up again. That's a big influence on an IWM. There's a lot of eyes on Amazon. Of course, it's always assumed that it's going to go up, and maybe it will. An interesting pattern beginning to play out here. So here was the breakout earlier in the week, and yesterday was an inside day. So with this type of a breakout clearing this resistance, right, you've got longs expecting this to move higher. I'm not saying that they shouldn't, but when you get an inside day after a breakout like this, your immediate line in the sand, if you want to protect yourself with a tight stop, is it's right under the low of the inside day, because it's not supposed to go down from here with this overall pattern. Right? And it breaks out, wide range bar. It didn't have the big volume, so a little bit of a concern there. Big volume, okay, maybe they were buying the pullback there. And now on the 30-minute chart, all right, here's the pullback to support. You want to see this pattern develop here and then eventually push higher, but the markets are in question. So if you're long Amazon looking for this to push up here, from my perspective, it trades under this low. It's time to lighten up or get out and reevaluate. What I see happening here, potentially happening, is I'm wondering if this is going to develop into a head and shoulders top. You can see what's going on here. So the bullish side is it continues to push up and negate what is beginning to develop, or it stalls here. It stalls here and begins to roll, and then of course is going to put a lot of pressure on the Qs and the Nasdaq market. So we'll keep an eye on that. First Solar got an upgrade today. It looks good. Gannon was discussing with me yesterday that the premiums were extremely high on the puts on this, and I looked into the fact that there is news coming on this next week, I believe on a lawsuit that's going on, and it got an upgrade today. So it's up here today at around $50. It certainly looks like it's going to go higher, but there is some news pending on the 22nd, so you want to take a look into that if you're going to plan to trade it. Okay, just a touch on our internals here. A lot of option traders betting into the close yesterday that the markets were going to go higher. This will typically put a lid on things for a day or so. Not the blue line, the pink line. So there's a lot of call buying into the close. It is triple witching. It could keep things flipping around. Keep that in mind. All right. So over the weekend, I will go into a more detailed analysis of breadth and internals and various markets and sectors to the subscribers or advisory letter. Of course, you can take a trial in the advisory letters, 21-day trial for $7. And we do have a monthly meeting coming up, which we'll probably schedule for the end of sometime, maybe Wednesday or Thursday of next week. So it would be a great time to take that trial, come into the meeting where we cover a lot of positions and different trading concepts, so you can learn a tremendous amount. Right? Have a great trading day and have a great weekend, and good luck in today's trading.